All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Friday, March 22nd. So another day of March Madness. I thought March Madness was more exciting in the stocks yesterday. Definitely today, day two of that, but in the exact opposite direction. So what happened today, and what were some of the reasons? So I like to do these videos at the end of the day as just kind of a summary for the week, but this is a little bit different, and I want to give a nice look to a look ahead to next week. But let's start with kind of putting together the week and what happened today, and we'll go over some of the major macro moves as well. But yeah, let's kind of just start with we finished down on the lows, down 1.8%. We talked about in last night's video, I used the word euphoric about 4 times in last night's video, and that's what it really felt like yesterday. It felt like everything was going up, right? Especially the risky things like the semiconductors were up. That was the big mover yesterday, but it was also your software stocks, your medical devices. All these groups made 52-week highs yesterday. And we talked about, which I don't talk about every day, only when it gets really extreme, because I think it's important. You really won't see me tweet out the put-call ratio unless it gets really extreme. So that's kind of what we had on our hands yesterday. It got to be 0.51. If you're not familiar with this, the put-call ratio, the puts are in the numerator, the calls are in the denominator. When today, I don't know if today's stats are out, and you could go right on the SIBO website, but let's see what today was for comparison purposes. No, they still have yesterday's, and maybe if you go on, if you use CPCE, I think they update it probably right around this time, but CPC was what, about 0.9. This is the put call ratio for equities. Yeah, you could see the big uptake today. So this was 0.9, right? So a lot more puts were bought. When this generally happens, we'll go back to this, what I tweeted out yesterday. The bulls get a little bit too far over the tips of their skis, right? It's kind of like a little bit of capitulation buying. So again, if you're a regular viewer of the video, I think, and I didn't count, but I think I mentioned euphoria about 4 times yesterday. It's really a good place to sell, right? And the thing that's been kind of difficult about this market is it's just kind of been, it's just been absolutely amazing the last couple weeks, this week as well, which was supposed to be a down week for seasonality purposes. Normally the week after quadruple witching is a weak week, and we got a pretty, very nice rally yesterday. But we got, like I said, I think the right phrase is to go basically over the tips of your skis, right? The other thing was that I was using as an indicator yesterday, and again, I also talked about this in last night's video, is that, perma, which I don't really understand, but perma bulls were like really going after the perma, am I saying this right? Perma bulls were really going after the perma bears and like giving it to them. So that's usually an indication as well that that is probably a place to take some profits, right? This market will humble you. If you think you're so right, the market just has a way of retaliating back against you. So unless you completely sell out of everything on yesterday's move, you got caught a little bit. And that happens, right? Especially the way that this market has been moving. If you would have held on to longs today and we would have been up again today, we would have said, oh, great trading. But, you have, I think, because my P&L was down today, but I took off some things yesterday. Like I had on, good thing that I did this, right? I mean, I took off Etsy that I added in the beginning of yesterday. I just said, hey, enough is enough. I looked at those put call ratio. I looked at too many things just flying to the upside too much. I took off FIVN, that I had on as well. Thank goodness I did that. That was down 5.5% today. So some of these things that I took off yesterday. We talked about Square. Square just does this. If you didn't, I did not take a target in this one. I did not put on a huge position, but we saw a lot of call buying. I want to talk about that for a minute too, and then I will promise I will get into today's moves and to think a little bit about next week. But the option call buying yesterday too. Just we talked about the put call ratio, but you have to realize that a lot of this order flow that we saw yesterday, you could see April, XBI May 22nd. MRVL both for April and for weeklies I think were bought. So you have to realize that this is really short-term momentum call buying, and I'm not trying to be negative about following option activity or having that into your system, but you really have to be mindful that a lot of this stuff it's for day trading purposes, right? When they're buying as much as they were buying of MRVL, which is a good example. It's good to kind of go through this, I think, so that you could learn not to make these mistakes if you're newer to this. But MRVL, I think, was up 4.2% yesterday. Or no, it was up, let's see. Why don't I check it out? But again, you won't find people do this who are just strictly option followers. It was up 3.9% and it was down 5%. So unless you just took that as a day trade and took it off and said, hey, I'm happy with it. And something like this, right? If we go back to where was this trade, right? And let's say it went up for 63 cents, the buyer of this, and maybe it went up to 80 cents, right? That's a nice profit for the day. And I don't know, I'm just making up numbers here. But let's say, where are these calls marking today? These are the 20.5 calls. They're marking at 50 cents, so that's not that bad, But still, it's marking at a loss. And I think the majority of these trades that you'll see that were all aggressive, I only put aggressive trades on here. They're probably all underwater, right? Coop, ZS, these names got annihilated today. So in my opinion, right, you have to really ask yourself whether or not this is good option flow or not. And it's something that you want to follow because, this was down 9% today. Now, again, we've seen ZS, a lot of calls go up, and we've seen them all the way back here. So, and the ZS that we saw too was further dated. I think it was either December or January calls. This is front month stuff, right? So it's got, again, I call them Momo calls. So you just kind of have to realize that. I know, again, people, now if they were up, everybody would be going, retweeting themselves, right? But it's very tricky to figure out whether or not you want to go ahead and buy or sell some of that stuff. The other thing is a lot of the stuff that goes up, I say this, and this is what we try to do in my room, is to get in before the option call buying. A lot of times, just like the ZS and the Coop, when you see this order flow that's short term like this, sometimes it's great places to take them off when you see the call buying, not to enter. All right, so that's another thing that I think people don't go over because sometimes people are really hooked on option buying and they use it as a crutch. They can't look at these things, to find the signals themselves. They have to sit and they have to wait for that trade to hit the tape. But that's not our goal at Tribeca Trade Group. Our goal is to get in way before the option activity hits the tape. In my opinion, a lot of it is really late, or bad timing, bad time. So anyway, that's that. Again, I'm not trying to bash, but you have to be practical with the things that hit the tape. Okay, so let's talk about. So now that we talked about that, let's talk about what the hell happened today. And so again, good to talk about the sentiment. The put-call ratio being way over the tips of its skis yesterday in terms of call buying, and the euphoria that was on Twitter yesterday. But so what happened today? Kind of a reversal day. These days are tough. Europe, when you come in, and Europe was getting pounded, they had some PMI data, which is PMI is a leading indicator, and their numbers were not good. They were really bad. Right, so this caused a lot of macro things, and really when I say macro, I'm looking at bonds, gold, the dollar, and those things have had a lot more volatility to them since the FOMC, right? They've been moving all over the place. So let's start with the long bonds because I think this is important. And I think TLT finished up 1.5%. There was a couple comments, and it's good to talk about this, and this is what we do in the trading room during the day, is we kind of just, vet some things out here. Oh, notice there's a virgin point of control up here. That might be lurking up here. I don't think that's a virgin point of control, but still interesting. But, someone said, oh, well, we're just basically giving back yesterday's gains. I don't necessarily think that. I think that this may be a little bit more of a sustained pullback. And when I say sustained, maybe a couple days to maybe we'll see. But usually it's more than one day is what I'm getting at. So the bonds were up 1.1%. So that's really risk off to see that big of a move in bonds. Now this has happened before and it's fell apart. This was back in the beginning of January. But, this really will cause things to move around, right? Because there's a lot of interest rate sensitive sectors. Maybe not so much technology, but utilities, REITs, the banks. So these areas. And, if we go over to the regional banks and what they did today, what I sent out today on private Twitter is I have not been a fan of the banks for months. I don't know, maybe for years. And I don't think that you need the banks to have to rally for the market to make new highs. I just think that there's something different going on here. But that said, we really don't want them to break down either. That's not a good sign if the banks start to kind of capitulate. And down 4.3%. I don't know, what were these down for the week? 10%? So, and on heavy volume all week long. That is not a great sign to me. The other thing is IWM, right, which the biggest weight in the small caps are the financials. So that KRE makes up a lot of the IWM. There's a number of other sectors in there too, but you have to realize that this IWM has done a fabulous job at leading moves, right? It led the move here, and it led the move from the lows. So it is breaking down, and it's breaking down hard. We had one day where where it rallied. It seems like we get this one step forward and two steps back recently. And you could see how this looks if we bring up, I think, a good side-by-side chart to look at, or ratio chart, I should say, is IWM over SPY. Right? And we're almost back to December lows with this ratio. And look at how hard it's falling. So what does this tell me? My interpretation that the small caps are falling like this, kind of get out of the way in the short term and see where these things want to go. Right? And again, taking a step back, you realize that we have had a monumental run in the last couple weeks. So why, try to be greedy and nail the top, and try to make an extra 10 or 15% in your portfolio. I think at this point, now if we just saw a general pullback and we were down 1%, and these things weren't going on, but that looks like it broke value today. So I think it's a little bit different. All right, so banks, small caps. You look over. So these to me are warning signs. Transport's moving down. And then what happens once this volatility creeps up? By the way, the VIX closed at what, 16.5? It could push higher. It certainly did not. I was thinking that maybe it would. Around what time? 3 o'clock. 2:30, 3 o'clock. It was starting to push down, but then we kind of rallied to the end of the day. So my point is, be patient and let it work its way out. There's a couple other things that I wanted to mention. One of my favorite groups has been the software group, right, which made a 52-week high or all-time high yesterday. But what happens when volatility creeps back into the system? This is one of the first groups to kind of get hit over the head. Why? Because the valuation is high, right? The multiples are pretty high in this stuff. So they'll go after these for a couple days, and we've seen this over and over. So I don't get discouraged when you see names like Zscaler and ServiceNow get hit really hard. This happens, and then it kind of clears out. And I'll use the word I used yesterday. It clears out the euphoria, and then it begins to build back up again. So you just have to play your cards right with letting the move play out for a couple days, and then be ready to, to attack once it kind of scares out, all of the weak hands in this group. Right, and I've been saying this for the last couple of weeks that this group is due for a little bit of a pullback, and it's just continued to charge ahead. So now maybe the pullback comes in a little bit. All right, so what did I do today for trading wise? Definitely played things more to the put side. Don't be afraid to buy a little bit of puts, either for protection or just to speculate in the short term. There's nothing wrong with that. It's really good to buffer your portfolio with a little bit of insurance at this point. They still don't cost that much with the VIX 16.5. That's not really a lot of money to spend, for that you're not paying that much of a premium for the insurance. But again, like I said, with small caps moving down like this, the regional banks, the transports, to me it might seem like a little bit more of a more than a one-day event of volatility. So I played a lot of things to the downside. I mentioned that yesterday. I took off some things like FIVN, which was a nice save, right? I missed the whole 5.5% move down today. Etsy, which I added in the beginning of yesterday, and I didn't like what all those. I thought the call activity was just too much, and missed the down 5% move in this one. So, I dodged a few bullets, but I still got caught in some things today and had to take a few things off for either scratches. I took off Yandex today, even though this wasn't a loss, it was basically a scratch, but I lost the gains that I was accumulating. KSA, so just kind of trim some positions. This way you don't get caught. I have no problem doing that on a down day, because again, we never know. I don't have a crystal ball. I never know when the volatility is going to hit. Again, it gave us a pretty good signal yesterday, but still, I'm never going to be able to sell everything on the absolute highs. So I would rather, and let's go back to IWM for a second, right? I would rather sell in here than down here, than be forced to sell down here or down here. Again, I don't know where we're going, but when volatility creeps in like this, no problem having to get out, maybe not at the tippy top. All right, so I reduced some risk today. I reduced some risk yesterday. Clearly didn't do it all, but I think the bottom line is just be patient. Again, whenever I talk, when I see a little bit of volatility in the system, and I know we're fixated. We look at our P&L every day. You have a down day, and sometimes your first instinct is to try to make it back. Just realize it's still March 22nd, so don't be overcome by short-term thinking, and give yourself some room, and to let whatever's going on in the market work its way out a bit. All right, so that's it for today's video. We'll have more this weekend in the newsletter. I can't wait to go through different groups of stocks. Clearly, like I said, this move in interest rates, it's going to bring other groups to the forefront. It's going to make them more appealing and others less appealing, right? Today's option activity, we saw all was not completely horrific today. The housing numbers were really good, and we saw some Lennar calls that went up. I tried these today. We also saw, what was the other one? I think, was it DHI calls today? Right, this is going to be pressing back to the top of value, but we saw both Lennar, which reports I think Monday after the close. So again, not trying to be completely, yeah, you can see the calls, make calls were bought, were swept. We'll see if that increases open interest. So again, don't mean to be totally negative, but just to respect the volatility that showed up today. All right, guys, have a wonderful weekend, and I'll see you guys this. I'll see you guys Monday, but you could expect the newsletter from me probably Sunday, where we'll go through the charts and see what opportunities present themselves. Thanks. Have a great weekend.